Time for the big three stocks, three charts, three trades, and Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joel Hawthorne, head trader, CEO, This Morning Snapshot.com. Thank you both for being with us. Joel, before we get to Shopify, quick thought on what we're seeing in the markets this morning.
Oh, Nicole, Ben, always a pleasure. And really quickly, I must say before diving into some of the trades, love the rebranding, love everything you guys are doing at the network. Everything looks great. So congrats on that stuff.
Thank you for being a part of it.
Thank you very much for having me. Just say, when we think about the overall market, I think one number that jumps off the page in me is that's near 4,500 on SPX. I think 4,600 above our heads is what seems to be the bulls are thinking. I think anything near and below 4,500, maybe approaching 4,400, is where those bears are. So I think 4,500-ish, that area where we're currently sitting, in SPX currently trading 45.13 and change, is really the tug of war. And we'll see how long this lasts. We have a lot of economic data coming in a couple of weeks, so we'll see what happens. But definitely, I think that's the bigger narrative, this price range we're in right now.
All right. Now, let's talk about Shopify. Had a nice pop in May after the earnings, hit a new high, pulled back some, but is in on an upward trend right now. What are your thoughts on Shopify and when you look at the chart and what made this jump out at you, Joel?
Well, I think this is one that definitely got some momentum, a gap up on some news, some partnerships with Amazon. Definitely sitting right now about 66 and change or so, with a 52-week high of 71.43-ish. I think that there's definitely going to be some optimism there, but I think that the bulls may be running into a bit of a ceiling. I think that there may be some short-term resistance there, and because of that, I'm going to be a little bit of a bear, not too aggressive, but definitely thinking that the move that we've seen here right now may be the bulls maybe short-term a bit resistance here. I think they're going to run into a bit of a trouble in the short term.
I see. Okay, so hitting some resistance, maybe the bears have a little chance for a trade here. What are your thoughts, Ben?
Well, this is a key area of resistance that the market established on the way down on the bigger picture, but I think that the real story here is on the more intermediate and on the hourly and the 4-hour candle charts here. We'll get into the daily in a second here and talk that longer term trend lower, but let's begin first and foremost on a very positive tone here and the trend that we've been seeing to the upside. In this instance, we're talking from 67 all the way up from 51. And again, that was a nice strong rally we've seen over just the last couple weeks. Pretty well-defined trend environment to the upside. Bottom left to top right, exactly what we look for. And when you see a well-defined trend along the lines of what's been playing out in shares of SHOP, you're also going to see areas of consolidation that form along the way up. You're going to see limited retracement associated with them. And in this instance, a perfect example of that. You can see 54, 56, 59. We're currently balancing around 56. Now, keep in mind, while we're consolidating at this area, as long as we hold above 59, that working assumption that areas of value are moving to the upside is a valid one, and the bulls are looking for a new area of consolidation after a breakout above 66 to form at a higher level. Taking a look here again at the more intermediate time frame, in this instance, a very similar pattern, the 4-hour candle chart. Bottom left here in this example, we're talking about from 32 all the way up to, again, the recent highs we just talked about, just shy of 72. You can see 3 areas of consolidation. We went sideways horizontal around 38, 48, and recently more on this time frame around 61. You can see that we're still in this range here, so nothing really compelling here, just overlapping rotational price activity, acceptance though of these areas of value that formed at higher and higher levels. No rejection as of yet. Now, speaking of rejection, we're starting to reject and possibly form a little bit of a bottom here. These lower levels that we saw when we were balancing around 38, you can see that we've started to move higher. 65, the key area to keep an eye on, because again, as you're balancing around 38, you want to reference that prior area that formed relative to the one you're currently forming. So up and through the 65 level, starting to see some momentum to the upside now. Again, that longer-term trend is supportive of Joel's narrative, but the short-term momentum, the strength we've been seeing there, Nicole, is very bullish at this point.
Yeah, well, and that's the point. You are seeing short-term bullishness, and I know you're saying it's hitting some resistance, Joel, and maybe the bears have a chance here. And maybe this short-term run-up is because of the headlines that we've seen on the collaboration with Amazon, right? Where you buy with Prime app for Shopify, and that was an overhang. And now that they sort of settled that, that gave some optimism to the stock. But maybe that was it. Is that what you're thinking? That's the run-up, and now we can take a break?
Absolutely, Nicole. I think that the headlines have been a catalyst and the narrative for this bullish momentum we've seen in the short term. And that's why the bearish vertical spread that I'm putting on here is just above the 52-week high. So I'm going to sell that 72 call and simultaneously buy the 73 call. Both expire September 22nd. Collecting about 13 cents, break even 72.13. So we would have to make a new high for the 52-week high in order for me to be proven wrong. Not to say that that's impossible, obviously, but definitely saying that, hey, let's see if we continue to run to the highs, does Shopify kind of run into a bit of a ceiling somewhere here or around that $70 price range before pulling back or consolidating?
Yeah. All right, here comes Ben's staircase. I can feel it from the 114 high that we saw not that long ago on Coinbase, but it certainly has been in a downward trend along with Bitcoin itself, which has a 25,000 start to it, a handle of 25,880 today. So your thoughts on Coinbase, Joel?
Yeah, I think this is one, there's so much information going on around Bitcoin. We know that the headlines there are really have been flowing about possible ETFs and things of that nature. And I think a lot of investors or traders are looking, maybe running to some of those crypto stocks like a Coinbase that may appear to be directly to benefit from some of those headlines. And because of that, I want to take a bit of a neutral stance. I think, when we look at the trading range here, we know there's a ton of volatility around a name like Coinbase, and we know that the trading ranges can be wide from time to time based on those headlines. But I think that can be a falsehood. I think that there could be a bit of a range-bound trading for a bit of a short-term period. So that ETF information that came out about a week or so ago, we'll see if there's more of a catalyst to move this stock. But if not, I think the stock could be in a trading range for a bit.
I see. All right. What kind of ranges are you looking at, Ben, when it comes to the chart of Coinbase?
I've got mine on about a $70 range since the beginning of June. But before we get into that, I want to show you some of the conviction we saw with the news, as Joel mentioned. And this is exactly what I look for, Nicole, because if you look at price activity as I do through the lens of the auction market theory concepts, principles, and well, you notice that there's two things. One, this horizontal phase, right? And then the market transitions into this vertical phase. This vertical phase brought about by news headlines, imbalance. So we go from that balance phase to imbalance, and then you transition back into the balance phase. In this instance, we've been kind of leaking lower since. But again, just sort of pointing out how the market shifts from these two separate phases from one to the other. We're looking at a 15-minute candle chart here, so not that much information on this chart. This is a very granular tick-for-tick type approach towards viewing price activity, but taking a look at where things stand in terms of that bigger picture, the range that Joel was talking about, and here you can see I mentioned about $70 from 115, that upper extreme. You've got 45, the lower extreme. Do the math, $35 worth of range, and you're talking about add half of that to the lower or subtract it from the upper, and you come with your pivot level right now. So we're hanging out right at this $80 level. It's significant, but you can see that we're just kind of random as long as we hold above, again, 45 or below 115. Let's take another step back here because, Nicole, you mentioned that staircase type pattern chart. You knew I had it ready, right? Here it is. Again, very well-defined areas of consolidation that have formed, and I'm looking at this one, again, 60 being the significant area that we're currently in, but a very well-defined example here of top left to bottom right. You can also see, again, a very well-defined example of how those two phases of price development that I just described, they don't only occur on the 15-minute candle chart, the hourly, the daily. Here it is on a weekly. We're talking stocks, bonds, ETFs, futures. I mean, bullish, bearish scenario. That's why I like it. It's so robust. Here it is, pretty well defined, right? 343. You get that separation, lower lows, lower highs, high conviction. We balance out around 263. Wash, rinse, repeat. But look at the phase that we were in the spring of, you're talking 2022. I mean, that is a high conviction phase of the downside, and then we form value again around this $80 level. So basically in a downtrend here right now, but longer term downtrend here right now, that's for sure.
Yeah, and I like those long-term charts because they really tell the picture. There was so much excitement, and this really, when you're above 300 over there on the left side of this screen, it shows the excitement that was surrounding Coinbase and Bitcoin, only to see us here at these levels trying to figure out what next, at $77 today. So your final thoughts here, Joel?
Yeah, definitely. I think the trading range that Ben really pointed out there on the chart is spot on. I'm a little bit tighter. The Iron Condor, I'm going to sell that 99 call, buying the 100 call, both expiring September 22nd. I'm also selling the 70 put and simultaneously buying the 69 put with the same expiration, collecting a credit of about 25 cents. My break-evens on this trade really tell the bigger story. 99.25 to the upside and 69.75 to the downside. So that really puts us kind of in that range where we'll be breaking some recent swing lows to the downside, or obviously really pushing to the upside to test that $100 price range that we've seen here back sometime in July. So we'll see how this works out, but very neutral stance with a pretty much wide trading range.
All right, up next, Okta. Why did this one jump out at you today?
Just over the past couple of trading sessions, we've really seen some movement there, some momentum to the upside. We've seen a bit of a push, currently trading 87.82 with a 52-week high of about 91.50. I think there may very well be some more bullish momentum there breaking out of a very long-standing range. I think the trading range that it's been in goes back a couple of months, probably right around the beginning of June up until current date. So finally breaking out of this very narrow range that it's been trading, I think there may be some momentum here to push to the upside. So we'll see what happens there.
All right, thank you for that. What are your thoughts here, Ben, on Okta as you take a look at this chart?
Well, we are seeing some momentum to the upside. In many ways, this is a combination of two names that we already looked at. Let's begin first and foremost with the more granular intermediate time frame. The hourly candle charts is what I have here. And another high conviction trade to the upside. You can see basically being shot out of a cannon. Sideways consolidation into the vertical phase is what you should be able to identify here. It's pretty well defined. At some point, we're going to find a stopping price, right? This thing isn't necessarily going to continue higher indefinitely. I've never seen that happen to this point yet in 30 years of watching price activity. But here we have the possibility for maybe something to form in terms of balance around 66, 67, something to keep an eye on this week. But again, horizontal phase, vertical phase, and then let's watch for that next horizontal phase to come back into play, because that's one of the things, again, about these auction market theory concepts. The principles, they're very simple. There's only two phases of price development, so it gives us something to kind of look for and expect and anticipate. Again, in this instance, it's going to be something a little bit more overlapping and rotational relative to the high conviction trade we've seen to the upside here over the last, couple weeks since middle of August. Taking a look at where we are, Joel mentioned kind of range-bound price activity. We've got a pretty well-defined upper extreme around 91. You've got a lower extreme from the end of last year around 67. And here we are working our way through the middle of the range, so somewhat bullish. Speaking of somewhat bullish, I want to show you where we are on the bigger picture here. Look at this. Longer-term trend to the downside, but it does look like, again, we're starting to get some momentum higher. The next big level for us to keep an eye on after balancing out, first and foremost, around 260, then a big breakdown. 93 was your next big area, 53, and here you can see we've kind of in a drift higher, actually forming areas of consolidation at higher and higher levels, but still holding below 93 at this point. So not what the bulls wanted to see, but not necessarily invalidating the working assumption here that we're forming value at lower and lower levels. Something to keep an eye on over the next couple days and weeks here. Again, some good energy to the upside here, just still holding short of that key threshold up around 97 at this point, still about $5 short of that, Nicole.
Okay, thank you for that, Ben. There's been a lot of optimism surrounding this name, Joel. I mean, I'm looking forward to your trade. They did well in the second quarter. There was the analysts that have had a lot of buys and overweights and looking at the focus that the company has on efficient growth, and they've been talking about that. Where do you think this stock is headed now?
I think in the short term, we're just sitting shy of those 52-week highs. And I do think that there may very well be slightly more momentum to the upside. I think this is a name that is now getting on the radar. One thing that I'm looking at here is I'm really watching some of the option paper and some of the option flow. And this one has been picking up some momentum along with some recent daily volume. So that being said, I think that there may be some, it may be on the radar for some buyers. But again, we're just sitting shy of that 52-week high. So after a trend like we've seen, we may see a stopping point like Ben mentioned, and maybe some consolidation before that auction theory takes place. Because of that, I'm going to be bullish. I'm going to sell that 81 put expiring September 22nd as well, buying the 80 put. So in the event that we stop here, consolidate, or drift a little bit lower, that 81 put, I'm anticipating us still that 81 put expiring worthless. I'm going to pick up a credit of about 12 cents, and my break even is $80.88. So this gives me a little bit of room for where we are right now. Slightly about an $8 move to the downside. It would have to happen for me to feel some pressure. We will see what happens. Anything is possible, but definitely bullish, but not chasing the highs at the moment.
All right, Joel Hawthorne and Ben Lichtenstein. Thank you both. Joel Hawthorne, themorningsnapshot.com. Thanks.